Hi, my name's Tim Munro. I'm the Managing Director of Change Accountants and Advisors, and I have here Nathan Smith, who's our Head of Wealth Management. What we're talking about in this video for our latest email is how you can buy a parcel of blue chip shares, but using capital protection, you can not lose your money if the share market goes down. At the same time, if you prepay your interest for these shares before 30th of June, you can get a tax deduction in this financial year. Now, why is this important? There's only, apart from the general tax planning strategies you can have, like bringing forward expenses if you're going to pay for certain items from a tax deduction point of view, superannuation is one thing you can do. Prepaying interest for share investment or for properties is another thing. Why I like this one, and there's a number of ways of doing it. One of the ones that you can use is called a Macquarie Geared Equities investment, and there's a number of others as well. Macquarie, for education's sake, to illustrate the point, Macquarie will lend you 100% of the amount that you want to put in shares before 30th of June. So say it's $50,000, they'll give you $50,000. They'll also lend you the money to prepay the interest on that for the next 12 months. So zero cash out of your pocket before 30th of June. What that means is you can claim as a tax deduction the interest that you've prepaid, and you get a tax refund in this financial year. What you're doing is you're using the money that you would have paid in tax to pay interest on a bundle of shares. Now Nathan, what sort of shares do we use in these sorts of investments?
Well, generally speaking, we try and look for blue chip share opportunities, something in a good, strong, consistent company, a BHP, an ANZ as an example. A company that's got good growth potential, but also the ability to pay consistent dividends as well.
Yeah, that's the key. Because see, if you do this, it's just a normal share investment. You have all the dividends in your name, you pay out interest, and you're paying back the interest repayment loan, and you're getting a big tax refund in July or August based on the amount of interest you've prepaid. And it starts at $50,000, you can put that up. We've had some clients do it for $100,000 or $1 million or whatever it might be. So it really comes down to how strong your cash flow is and what surplus cash you might have, what level of assets that you have, and how much of a tax deduction you want to get. As we said, it's allowing you to, with zero cash out, have an investment in shares that are capital protected. It's normally for a 3-year period, so if the shares go up in value, you get all of that. If any of them go down, you don't lose your money on any of the individual shares. So it's a wonderful thing to consider. Now that's not investment advice. You need to come and see Nathan and his team, and they will go through a process by working out what's the best thing for your circumstances. Then they'll give you a statement of advice which explains how it would work exactly in your circumstances and all the ways of moving forward with it, and as well how Nathan and his team can keep giving you reviews on that information to make certain that this will help to boost your retirement in the best way possible. So please come and talk to the Change team. We're here to help, and this is another really good option to consider to get your tax down and also to build up some really good growth investment assets.